What is up, guys? My name is Bryce Pruitt. This is the M1 Journey, and welcome to the channel. Alright guys, and once again, I'm Bryce Pruitt. I'm actually 20 years old. I'm almost 21. I'm a college student. I double majored in engineering management and economics. I'll actually be expected to graduate maybe in the next year, maybe year and a half. I have enjoyed investing for a long time. I've been doing it for almost 3 years now. When I turn 21, it'll be my third year. I've only been seriously investing, I think, probably for the last 7-8 months, really since the pandemic first hit. I really used it as an opportunity to put more skin in the game, to get better acclimated because I saw it as an opportunity. So I just want to start this channel to share with you what I've learned and what I'm doing, and maybe we'll all learn something together. We'll get into it. So the reason I'm starting this channel is I wanted to share what I've learned about investing, as well as provide a means to track my investment progress over time. I invest using M1 Finance, and I have been for almost 3 months now. I started off in Robinhood for the first 2.5 years I invested. And then I kind of decided M1 was a little bit better for what I was wanting to do. I focused on dividend investing, generating that passive income. So with my M1, I actually have 2 different investment portfolios. One is my long-term portfolio. This is where I invest in companies that I personally like, I have an interest in, and they kind of give me a mix of that dividend potential as well as growth potential. And I kind of like where I'm at with that right now. I have a lot of blue chips, but I also have some of smaller companies that aren't as established, but I think will become large dividend payers over the next coming years. So for my long-term portfolio, I invest $125 every other week. And then for my Roth IRA, I invest $75 on those intermittent weeks in between my long-term portfolio. So every single week I'm investing either $125 or $75, and it's every other week, switching back and forth. So in these videos, I'll give you weekly updates. I'll show you how my portfolios have performed over that previous week. I'll show you what I bought. If I had any sells, I'll also show any dividends I earned, what they came from, how much they were. I'll show you how much in dividends I've added from the buys that week, and I'll also show you what I'm yielding. And that, what a yield is how much of what you put in you're getting back out in the form of dividends or income. So before we get too far along, I want to make it abundantly clear I am not an expert. I'm not a financial expert. I'm not going to tell you what you should or shouldn't do with your money. This is strictly for your entertainment and for my, as really it's a hobby. Just wanted to try something new. So I am not an expert. I'm learning just like you guys. I'm hoping maybe we can learn together. Maybe I'll teach you something, you can teach me something. But yeah, so I'm not going to tell you what to do with your money. I do what I do on my own. I don't really rely too much on other people's advice. I feel like I'll either make it on my own or I'll fall on my own. So I just want to make that clear right from the start. Okay guys, with that being said, I think for the first time, let's get into it and check out my portfolio. Okay guys, and for the first time I'd like to introduce you to my long-term portfolio on M1 Finance. As you can see, this portfolio is worth a little bit over $15,000, almost $15,200. I've been really steadily adding to this portfolio since I've joined M1 on July 2nd. As you can see, it was just worth a little bit over $9,000 then, and now it's over $15,000. So I've actually invested a little over $7,100 since I've joined M1 Finance, so I've almost doubled my holdings in that small amount of time, even though I've been investing since 2018. As you can see, it's performed relatively well over the last 2+ months. It's really been kind of hit and miss the last 2 weeks. As you can see, if I flip over here, I've actually had my earnings cut in half in just 1 week. In fact, today was particularly bad, but not as bad as it once was around noon today. It was down over $500 at one point, which is not great, but I was in luck because today was a buying day, so I actually kind of bought the dip, even though that wasn't really my plan. It just was my scheduled buy. So as you can see, I had 10 buys, and it was $145. It I had some saved up dividends, so that I gave another $20 in addition to the normal payment of $125 I had here. So as you can see, my buys of the week had 10. This is just M1, trying to balance out the pie, so I didn't do any of this. This was all M1. So bought a couple ETFs here, as well as Apple and Lowe's getting the lion's share, as well as IBM. Apple and IBM and really all tech stocks have kind of been sliding over the last 2 weeks. I'm sure most of you have seen. So this is what I've got this week. So if I quickly switch over to my Excel spreadsheet where I have everything documented, you can see everything I own, how much I own of it. This is how much it pays in dividends, and this is how much I make annually from that company based off what I own. So this is how I track everything. And then from my long-term portfolio on its own, I make over $526 in annual dividends, or I'm expected to, assuming there's no cut to the dividend or a company doesn't increase their dividend. So off today's purchases, so I invested $145 and I got back $4.02 added to my annual dividend. And the yield was kind of low, but that can be expected because most of the money actually went towards Apple, and Apple's a very small dividend payer, so that can be expected that the yield would be a little bit lower than I would generally want. So if I switch back here to M1, I can actually see that one was excluded. It wanted to buy Bank of America, but it doesn't do anything less than $1, so not really worth it if it's less than $1. So these dividends, like I mentioned earlier, kind of stacked up a little bit over the last week. So I had 3M, McDonald's, Pembina, and I'm not really sure what causes this. This has happened before. If anyone knows what it is, feel free to comment or let me know, because I don't really understand it, but oh well. And then Realty Income, good reliable monthly payer. Most people who invest are aware of Realty Income, even if they're not invested in themselves. Duke Energy, Waste Management. So that's what I've kind of gotten over the last week or so. But to actually get into it, what's actually in my portfolio, mostly things I'm sure everyone's heard of, blue chip stocks, things that a lot of people have, plus things I believe in, really. And most of them done pretty well. They were doing better as of a week or 2 or 3 weeks ago when the market was up, but it's kind of to be expected that the market might be down over the vigorous comeback it made over the past few months, even with COVID still raging across the world. So in my long-term portfolio, I have 35 holdings total. 4 of those are ETFs, and then the rest are safe dividend payers, and then what I consider to be growth stocks. So we'll flip over to there. So going to dividends first, and then I have them divided by what I consider to be their sector. Now some of these might not actually be their official sector according to Wall Street. These are more just loose terms that I give them based off what I consider them to be in my head. So for example, like consumer staples, I got Coca-Cola, McDonald's, PepsiCo, all good companies that will be around forever. Industrials, got 3M, Waste Management. I really love these 2 companies. I mean, I feel like there's nothing you can really go wrong with these. Then communications, of course, got the big 2 in Verizon, AT&T. We'll go consumer discretionary. I love Lowe's, great company. Starbucks, of course, even though I don't drink coffee, but I know they're a good company, so I'll continue to invest with them. Utilities companies, Duke and Dominion. I'm actually considering liquidating my assets in Dominion and going to a different utility company. Dominion is actually expected to decrease their dividend because it kind of had a rough few months due to COVID, so that might be one I might be selling in the not so distant future. Then my worst performing sector has been energy, but that probably be true for a lot of people. Particularly I've been hit hard on ExxonMobil, but I think the long-term prospects for Exxon are going to look up since they're such a big company, and I think they're probably too big to fail. If I go all the way back, we'll go into my growth stocks, and as you can see, actually, important to note, my growth is actually above my target in the percentage. I'm trying to get these all weighted out so I can fill some of these spots in my growth portfolio that I haven't bought yet. So as you can see, I have these 3 filled, but nothing in these. So consumer discretionary, 100% of it goes to Disney, which is my largest holding overall. Industrials, this is dated back to my Robinhood days, so I have a lot of Uber, a lot of Delta. I bought them on the dip, glad I did. And then information technology, advanced micro devices has been doing so well that I don't have any Microsoft in this portfolio yet, despite having a target of 67%. So. And then one day, when the money allows it, I'm going to have P&G and Target in this slice, and Toronto Dominion Bank, which I think very highly of. I think they're a good company. They're very well diversified despite being a financial company with their efforts in TD Ameritrade. So very excited about eventually owning that. So, and then my ETFs, my largest one being SPHD, which I'm probably not going to be buying any more of it, or hopefully not for a while. And then SPYD, which hasn't performed as well as I would have liked, but obviously it's only $7 down, so definitely can come up pretty quick. And then VOO, which a lot of people are familiar with as being the Vanguard, like representing the entire S&P 500, and then this real estate index fund from Vanguard as well. And that is my long-term portfolio. And then I'll switch over to my Roth IRA. So my Roth IRA is relatively new. I started it on August 3rd with my minimum deposit that M1 requires of $500, and then I've been kind of adding to it over the past month and a half. It has not performed as well, but it's a new portfolio, so nothing really sweat over yet. Microsoft's really struggled since I've started this portfolio, as well as Pepsi. But with this way the market's been moving recently, I could easily see these swinging and making up these losses in a single day. So this is something I'll continue to add to for the remainder of my life. Right now I'm contributing $75 every other week, so that should help dollar cost average some of these losses and eventually increase my dividend output. And on this almost $1,200, we'll check how much I'm earning. So for my Roth IRA, here it is here, I'm earning almost $31 annually, which doesn't sound like a lot, but when you're 20 years old, something definitely grow off of for the next 40, 50 years. So we'll go back to my long-term portfolio here. And, you know, this is subject to change, I guess. Over time, I'll probably become less aggressive and I'll increase my ETF holdings eventually. But right now I want to really focus on hitting these hard and getting these really solid companies that I like, such as IBM, 3M, Lowe's, Verizon, Waste Management, AT&T, these companies that I really like. I'm going to aggressively push on some of these in the not so distant future, but as well as in addition to my bi-weekly contribution of $125. So hopefully this next week will be a little bit better than the previous week, and I can report some gains, because I had been doing pretty well, but we kind of dropped off with the market slide, but that's to be expected when we still have a global pandemic going on, so nothing to worry about there. So as far as making major contributions to this portfolio, I'll probably hold off for a while. I want to see what happens with COVID first, and then also with the upcoming election. I think could really have a big impact on how the market plays in the future, and I'll have to adjust accordingly. So, yep, this is what I have. I'm sure it's not perfect. I'm sure some people will disagree with some of my holdings, but feel free to share your thoughts in the comments. If you do like it, then also share that as well. But yeah, so hopefully next week will be a little bit better and I can report some good gains. Alright guys, that's going to wrap up this first video. I appreciate you guys tuning in and watching. I hope you guys like and subscribe. Drop down in the comments what you liked about this video, what you didn't like, so I can improve for the future. And also I would like you guys to answer, if you would, what is the first stock you ever bought? Or if you haven't bought a stock yet, what would you like to buy, or what do you plan to buy? Also, if you check out in the description is an invite to join M1 Finance, for the remainder of September, they will give you $20 for using my link. You have to both sign up and then also deposit money into your account. And just to be totally upfront with you, I also receive $20 if you accept my invite. But you guys want to jump on that now, so when it flips to October, I believe M1 is going to go back to just doing $10 for each invite for each referral. So yeah, you guys want to jump on that now, get that $20, and I think that'll wrap everything up for this video. So I will catch you in the next one. Thanks.